Alright, what is going on everyone on YouTube? Griffin here coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, if you're new to the channel and tuning in for the first time, definitely go ahead and hit that subscribe button down below and hit the bell icon right beside it. That way you'll be notified every time we go live or upload another video for you guys. It's been about another week roughly since maybe a little bit longer, week or so since I uploaded the last video. We briefly hinted on M1 Finance, kind of just overall investing update. Most of you know by now that I haven't actually submitted a trade, quote unquote, like active day trade, anything like that in the futures market or anything, in pretty much a month now. It was mid to late September. Like I mentioned in that video, we profited overall in the month just a couple $100. Just took the money and moved on. Very, very busy with our first child, of course. It's been a whole adventure and more to come on that, of course. And those of you in Discord know that I've been semi-absent. I've been hopping in there a little bit more lately. I've been trying to, as much as I can, at least a little bit here and there. At the minimum, I try to every day, but sometimes it's every couple days. Which, by the way, we have a Discord group chat. It's down in the description box. We now have over 115, 120 of us in there now. So it's awesome to see that community continue to grow. And like I said, I plan on being much more active in there. I'm just still slowly but surely trying to figure out this whole work life, new first baby. Babies need so much attention there the first few months. It's insane. Actually, it's a huge adjustment to say the least. But I'm trying to figure everything out, starting to get up a lot earlier, so on, so on. I'm planning on figuring out the whole work-life balance. So hope to be in there a lot more. I know a few of you that were new were asking if it's still active and whatnot in there. Yes, it is. It's just, it seems to be more active, obviously, whenever the host, me, is more active in there. So with that, we'll go ahead and just hop right in. So M1 Finance, I came across M1 Finance. I heard about M1 Finance way back, I believe in 2018, maybe even 17. I don't know exactly when M1 Finance came out and whatnot. They never used to actually give you any type of like referral bonus, and I just found out about this today, literally just now. I don't have a link or anything. I'll probably go ahead and put it in the description box after this. I'll do it later. But apparently now, if you refer people, they're going to give you $10. So if you guys haven't already, like I said, if you want, it's no big deal, but I'll put that in the description box after I upload this video. They did not used to ever offer anything like this, so that's pretty cool that they do that now. But anyways, so what I like the most, first and foremost, off of M1 Finance, which a lot of you probably know, but those of you that don't, if you're brand new to M1 Finance, this is pretty much in a nutshell, just quickly how it works, is pretty much you can see overall like my value, how much I have invested. So the thing is you do not, unlike Robinhood, what I like about M1 Finance more than Robinhood, which I'll do a future video about, like just literally the differences between M1 Finance, Robinhood, Webull, all those type of investing platforms. What I like the most about M1 Finance is you do not have to purchase like a whole stock or a whole ETF or whatever you're buying. So like VOO, I only have $22 worth, but if we go and click on VOO, we'll go ahead and just go over to research. I don't really use their laptop platform too often. I like using it on the phone a lot more. So we'll go ahead and look. You can see VOO is almost a $280 S&P ETF. Pretty much it just follows the S&P 500. And I'll get into like what all I'm invested in and whatnot here in a minute. But as you can see, mine, I only have about $22 worth. So I own less than 1/10 of this stock, this ETF essentially. You can see right up front your expense ratios, the dividend yields, all that good stuff. You can pull up a 5-year chart. I don't really use them much for charting, in all honesty. I'll still use TD Ameritrade Thinkorswim just because obviously much more advanced charting. But yeah, I mean, overall you can pull up 1 year, 6 months. Obviously, we all know the market really hasn't moved a whole lot over the last 6 months or so. But over the last year, we're now up about 13%. 3 years, obviously 42, roughly, of course, usually around 10 to 13% a year for the most part. Obviously, the past few years is an exception, been crazy volatile ever since 2017, 2018. Ever since Trump got into office, essentially, it's been a pretty volatile market. But to go back overall to just like my portfolio and whatnot, so we're up overall about $5, 450 with a 2.33% return. Last time we did an update, like just my investing update, I believe I only had $200 in this account. It was up about a dollar or two, something like that. We're up a couple more dollars since then. I'm not really thinking about like the overall returns right now. If you're playing with small money, you can't expect to be doubling your money, anything crazy like that, of course. But overall, just show you guys real quick kind of what our breakdown is. So when it comes to stocks, I like to only really have about 1% of any type of funds, with the exception of like an Apple, because obviously like if you strongly believe in a company, you can up that to like 2 to 5% if you want. At first I did have these somewhere around, I think Apple was at like 10%, McDonald's was like 4, etc. And I was just looking through a whole bunch of ETFs. As you can see, I mean, we got a whole bunch, and I'll break those down in a little bit here. But when it comes to stocks, I suggest if you're gonna buy any stock, go no more over than like 4% of your total like portfolio. But at the end of the day, it depends on if you're more of a swing trader, day trader. This account specifically is more of a longer term. I'm using it as what we like to call a bridge account. For those of you that don't know like much about finance terms, whatnot, bridge account is just pretty much like when it comes to your retirement, a lot of like your 401ks, Roth IRAs, all that stuff, you cannot pull out of those accounts until you're almost 60 years old, like 59 and a half if I remember right. And if you do, not only are you going to get taxed, which you're going to get taxed other than on the Roth IRA no matter what, but anything that's Roth, obviously you pull out tax-free, whatever. But if you pull it out before 59 and a half, I believe it's somewhere around like a 30% hit that you're going to take. So if you have $1 million that you're going to pull out, you take a 30% hit, you're going to take roughly about a $300,000 hit in penalties, all like horrible stuff. Where if you have a bridge account, you're just simply going to pay your taxes on like your capital gains, income, whatever your income bracket is, all that stuff. So that's pretty much what this is. Like I labeled it as target exit 2045 just because I know worst case scenario I'm going to be retired by 2045. I'll be somewhere around like 48, 50 years old. I already made that commitment to myself. I will not work past the age of 50 other than work that I enjoy doing, like businesses, stuff like that. So that's pretty much why I just labeled it. You can label they call them pies on here. You can share your pie with like friends and coworkers, all that stuff. You can go in, let's see, like I said, I don't use their actual laptop platform too often. There's a way you can go in here. Let's hit invest, maybe, no, activity. So I'll show you the activity too, just show you guys everything that's happened lately. Like I said, we put $100 in. I had 95 cents apparently, probably from like dividends and whatnot available, but $195 we put into trading. The order got filled. I'm really big on trying to get the stocks that I'm in. I want the ones that do dividends. So this it's a Realty Income Corporation company. They pay a monthly dividend. They've been on a hell of a run, actually. I'll go back to them in a minute, but I believe we're up roughly like 7 to 10% already in about a month since I invested in that company. And like I said, they pay a monthly dividend, which is pretty nice as well. VOO, we got some recently, and again, I mean, you're only going to get, if you're investing little money, don't expect your dividends to be dollars or anything like that. You're going to be getting well under $1 for the most part, 10, 20 cents or less on most of your dividends, especially the monthly ones. So like the Vanguard Index, Utility Index Fund, that one I think we just happened to catch it at a good time. I believe that's normally a quarterly, someone can tell me if I'm wrong, but I believe it's a quarterly. We might get some info on it here. Maybe not. Let's go over and check it out actually. So you can see the dividend yield's about 3% a year. How I always see that personally is, so if everything is flat, quote unquote, everything's flat, I'm going to still make after the dividend somewhere around 2 to 3%, expense ratio 0.1, so 2.94%. I'm at least keeping up with inflation. Inflation is somewhere around like 2 to 3% right now, if I remember right. roughly. So I mean, as long as I'm keeping up with inflation, it's better than sitting my money just in a lame ass savings account getting 1 to 2% too if you have a really good savings account. Which FYI, for those of you that have those high yield savings accounts, you probably just got an email today that got cut by another 0.25% thanks to the Fed decision. Expect that to continue in the future. Don't be surprised if in the next few years you're going to have to be paying to keep your money in a savings account. In all honesty, it's a joke really to have your money in a savings account, other than for like your emergency fund. Let's go back. So like I said, I like to have good dividends. I try to aim for somewhere around like a 2 to 3% dividend for like my entire account. I know there was a way I could actually see. Let's see if we go into holdings here. It should. I forget which page exactly it is. Like I said, we're up 1.27 so far. What's killing us right now is our McDonald's, as well as Starbucks. We got into Starbucks just at a horrible time. But again, plan on buying and holding these for a long time. Don't plan on really selling them this year, next year, anything like that. I just plan on continuing to invest roughly $200 a month into this account. And if you wonder, like, well, how's $200 a month going to really make you money? I have a video about that somewhere in, like, the financial freedom or financial independence, whatever I titled the playlist. I break down all the math about, like, if you invest such and such per month over a period of time, you'll have 1.2 million or 4.4. Like, if you want to see that, just go to that playlist. And I have a whole bunch of videos that breaks down, like, compound interest, calculators, all that good stuff. But man, it's not showing me exactly what let me see if we can. So it's not, it might be on the phone. So if I find it, let me see here. If I find out, because there's a way you can see your actual dividend percentage, like how much your dividend yield is per year. I have a screenshot of it. I know because I sent it to my uncle, if I remember right, just like my portfolio and whatnot. I'll put that screenshot in the Discord group chat for you guys to let you all see. But it's somewhere around like either 1.98 or 2.98, something like that percent. And that's just dividends. So I mean, if my investments go flat all year, I'm still going to make roughly 3%, 2 to 3% after the dividends, and then anything after that is obviously growth at that point. And then obviously with my dividends, I'm just auto reinvesting it back in, and so on. So I'll go ahead and, like I said, I'm just going to show you guys straight up everything I'm in, the percentage breakdown, all that good stuff, how much I'm up. Like I said, Realty Income Corporation, we're up almost 10%. I don't think this includes the dividend either, so it's another 4 to 8 cents, something like that. So it's up right around 10% since we've got in. Pretty much everything's green across the board, which is what I like to see, of course. And then, like I said, of course, this is prime example why I say just do not. It's not worth putting more than 1%, 1 to 2, 4 at the absolute most percent of your nest egg. No matter what type of account you're using, however many accounts you have, your nest egg should not have more than roughly 10 to 15% overall in actual individual stocks, and then within that, no more than 1 to 2, absolute most 4% in one single stock. Because obviously you can get something that swings. If you get a couple of these that swing 6 to 10% in the negative, you could definitely wipe out all of your positives. Like, I would venture to say, if I didn't have this, and I didn't have this hold me back, I mean, that's $1.50 alone. So, I mean, my account would literally be up roughly, not quite 3%, but about 2.25 maybe, somewhere around there. So, but like I said, I'm not like worried or anything like that. It's just something you definitely want to keep in mind. Just do not invest more than, like me personally, I'm not going to go over 2%. I love Apple. We're a big, quote unquote big, up over 8% on Apple since getting in. However, I would not go over 2% just because that's just kind of my rule of thumb. If you want to, go up to 4, but like I said, me personally, I'm sticking with 1 to 2% in any individual stocks. And like I said, you can see here 1, 2, 3, 4, 5, 6, 7, 8. We have 8 individual stocks that equal, I think, right around 9 to 10% of the total nest egg. And again, what I like the most. So you can see here, shares. This is what we were talking about a few minutes ago. We have 0.036 of a share of Apple, less than 0.05 of a share of McDonald's, almost a tenth of a share of Target, 8 hundredths of a share of Procter and Gamble. I mean, a lot of these, again, we don't have hardly anything when it comes to these individual stocks. A little over, almost a third of a share of AT&T. Now, where we start to get a little bit more traction is obviously in some of these Vanguard funds. So the ones that I like the most, which they're finally starting to come around and pull back up, the Vanguard growth, it's kind of been up and down since I've gotten into it. We'll go ahead and check that one out. Man, I don't know why. I wish it would let you pull up the actual chart. So we'll do this. We'll just go ahead and go over to research, and it's VUG. So we're in VUG, has a 1% dividend yield, not high after the expense ratio, less than 1%. But what I like is it's a growth ETF. I like growth ETFs. They're not really super volatile, but they do offer great returns. So you can see the last 3 years, this is up about 55%. If we pull up a calculator here, pull it over here. And of course, if you guys have any questions, I didn't even think about that. No one's tuning in right now because it's late. I usually do my streams much earlier. But if anyone pops in, they have any questions, feel free to shoot them there in the chat or after the video uploads. I'm sure a lot of you guys are going to see this after it uploads. Just shout your questions out in the comments, and I'll definitely answer them for you guys. So we're talking 55%. Actually, 55 and a third. We'll just go ahead and do the full thing. Divided by 3 years. Times 3 years. Divided by 3 years. That averaged over almost 18.5% over the last 3 years. Last 5 years up 63. So again, after you start stretching out 5 years, you're going to be talking roughly 12% or so per year, which is what I like. There's tons of people out there that say, oh, you can't do the whole 12% a year. I get it on Facebook all the time. I see a bunch of these loser posts about, oh, only the rich get richer, blah, 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 blah. And I'm like, guys, it's so simple. If you just find good, specifically Vanguard, I'm not like obviously endorsed by Vanguard or anything, but Vanguard has so many funds, and there's so many other funds. Investico has some. There's so many different funds out there that literally will give you minimum 9% to 12-15% per year on average. My rule of thumb is always whatever investment you're going to get in, if you're staying in it over 10 years, you can, if you pick a good fund, like say this Vanguard Growth ETF, I mean, that's a prime example. It's up 64% in 5 years. That's what? We'll just do 64 divided by 5 years. Almost 13% over the last 5 years. And if you include your dividends that you keep reinvesting on top of that, I mean, you're just getting even more at the end of the day. So, I mean, you're probably talking somewhere closer to definitely over 14%. What do they call that? Annualized per year after your dividend yields and all that good stuff. So, and again, this one's only 1%. So, I mean, that's one that I'm invested in. I like it. I plan on holding it, honestly, forever. It's just one of those funds that if it drops 40%, I'll just buy a bunch on sale. And I will talk more about how I plan on using this account going forward when it comes to cash on hand for when the market has downturns, stuff like that, because I want to be able to be the people that take advantage of, say, what happened last year at the end of the year when the market tanked 20 to 25%. And a lot of people were just caught with their arms behind their back because, well, we got all of our money tied up. We can't invest in anything. That's why I always suggest having some cash on hand, and I'll discuss kind of how I plan on doing that with only investing $200 a month starting at the beginning of the year. I'll talk about that soon. But overall, I mean, we'll go through some more of my funds and whatnot here, but the whole point of this video was just like, what is M1 Finance, why I like it, what I don't like about it. The only thing I don't like about it is the website. I mean, I wouldn't say it's complicated. So, like, here's my pies. I was trying to show you guys this earlier. So you, like, create a pie, and I'll do a special video because I'm sure no one's going to watch, like, this whole thing all the way through for the most part. But to keep it simple, I mean, you just create a pie. You simply pick what kind of stocks you want, what percentage you want them to be of your portfolio. You can literally search stocks based on like the dividend yield, like I would say a minimum 1%, maximum obviously anything over 7 is going to be just unrealistic. Or if you want to say, well, I want to keep up with inflation, then you're probably going to say 3, but I'll say 2. We'll say minimum 2% dividend, and then boom, there you go. You get your dividend yield. Here's 5%. ExxonMobil, AT&T, that's one that we picked, 5.36 percent dividend yield. Home Depot, another one we picked, 2.3. We had Verizon, but I was looking into Verizon overall, and I didn't like their books, to be honest. I mean, it's a good company, but, and I mean, the 1 year performance though, 3.5%. 3 year, only about 7 or 8. 5 year, or this is the average year by year, if I remember right. It might not be, but if that's actually over 5 years, I mean, that's horrible growth. I mean, you're essentially just planning on making money off the dividend, which that's not. I'm not trying to have a dividend portfolio. That's not what I'm trying to do. But like I said, I like that you can literally just search through the dividends and find the exact stock you want. I don't think Robinhood has a function like that. I believe TD Ameritrade does, but there's very few that actually offer that. So I like that, especially for a free platform like this. You can do market capitalization. So I mean, you're going to want a minimum of, let's say, 200. I don't know how it works actually. Would you say 200B? Let's see here. I don't know how that function works actually. So I think you actually have to type in as many zeros, because you can see our results started changing for each zero that I entered. But there's just so many ways that you can do research and find the exact stocks, ETFs, index funds, all of that stuff that you want. So I like that. And like I said, what I love the most is this is like opening up investing. Like, it's making doing bridge accounts so much easier. I think a lot of people probably aren't. Gotta love living close to a fire department. I don't think a lot of people are really going to think to use this per se as a bridge account, but I think over time it'll definitely catch on. The only fees you're paying, as far as I know, I don't know what the hell that was about. The only fees that you pay essentially are what the funds show. So I mean, say VOT, that's one that we're in right now. Let's go over here and research VOT really quick for you guys. VOT, you can see expense ratio. Boom, that's what you're going to pay in expenses. Just the fund, essentially. I mean, as far as I know, M1 Finance does not like try to charge you anything. They're not like selling your data or anything crazy like that. So I mean, whatever it says your expenses are going to be, that's what it's going to be. And that'll also be in the screenshot that I'll send to you guys in the Discord group chat here in a little bit. When it shows like your dividend yield, all that good stuff, it also shows your expense ratio. So like mine, like I said, I believe my dividend is around 2.9, roughly close to 3%, and then the expense ratio was somewhere ridiculously low. Like, it was well under 1%. And that's what I also love the most about these Vanguard funds. I mean, they definitely have the lowest funds. I mean, 0.07%. Like, that is ridiculous. And I mean, when it comes to investing, I mean, your expense ratio isn't what's going to ultimately make or break your dream when it comes to retirement and whatnot. But you got to think, 5 years, 50%. If you got a 1%, too, I mean, there's mutual funds and stuff out there that have like 3, 4, 5% expense ratios, because it all depends on how actively managed the fund is at the end of the day. The more actively managed it is, the more the expense ratio is going to be. And I can do a whole topic about this in a future video as well. I need to start using my Apple Notes to keep track of that stuff for you guys. But the whole point is, say you had one of those crazy funds that are so actively managed, say it still managed to do 50%, but you had a 5%, or even let's say 3%, which is the average for a lot of funds. 3% per year over 5 years is 15%. So you just knocked your 50% down to 35% over the last 5 years. And I mean, that's a huge difference because 50% over 5 years is what? Around 10% after your dividend yields. We'll just call it 10.5%, where if you're doing the 3% expense ratio mutual fund, that gets knocked down to like 6 to 7%, which you compound 6 to 7% interest over a period of 5 years versus 10 to 11% over 5 years. It makes a world of difference, especially when you start talking 5, 10, 15, 20 years down the road. So I definitely suggest at least keeping an eye on your expense ratio. If it starts to get over 1%, 1, especially 2, I mean, be very careful. If someone's wanting 2% of your money, essentially, keep in mind, guys, they get their money regardless if your money goes up or down on the year. That ratio is locked. They're going to get their percentage no matter what, if you make or lose money. So if they're doing 2%, 1, 2, 3, 4, 5%, then make sure that it has a good track record. Look farther than 5 years. You want to look 20, 30. You want to see how many years this fund's even been around. Because a lot of these funds have really only been around since 2000s or late 90s. Those funds that try to get you for like 2, 3, 4, 5%, they better have been around for at least a solid 40, 50 years, in my opinion. Me personally, I just don't like those type of funds. I don't like the fact that I can be down on a year. I can be down 8% and then ends up being down 10% because, we had to get our 2% fee. It just kind of rubs me the wrong way personally, and that's what I like. I mean, I love M1 Finance in all honesty. I think it was a great idea. I'm glad that someone finally perfected it. I know it might have been Webull, or there was some other stock investing app in the past that tried to do something similar. I don't think it's around today. But man, they did it right on M1 Finance. And like I said, you can see super user friendly. I like using the app more personally. I don't use the desktop platform quite as much, but it's super user friendly, super easy to do, super easy to like edit your pie, so to speak. Like if you went in to edit, you could take out a stock, put a new stock in, adjust your percentages, buy, sell, rebalance, all that stuff. It lets you know when the next trading window is. So if I submitted a trade now, then tomorrow morning they would get everything all taken care of for me. But yeah, like I said, if you guys want to just like jot down on a piece of paper real quick, if you want to look into any of these funds that I'm in the REIT Vanguard fund, which is VNQ. This is just more of kind of a safety net, so to speak. I only got 5% in there. I have VYM, which is the high dividend yield Vanguard fund. I have the Vanguard Industrials. I have the Vanguard Dividend Appreciation, which I actually just found out about this one recently, and I like it. Let me see. Was it what was the ticker symbol? VYM, was it, or VIG? VIG. Okay. So I just want to show you guys this one really quick, and then we'll go ahead and wrap the stream up. But VIG, I just found this one recently. We just started investing into it about a week ago whenever I put some more funds in the account. So this one, again, dividend around 2%, very low expense ratio. We go out to the 5 years. This is one where, again, roughly 10% a year after your dividend. You're going to get around 10 to 12% a year. Another one that I like very much. And again, low expense ratio was another. It wasn't a key factor. I mean, like I said, all Vanguards are very low. This one, the only thing that I didn't like was it has not been around very long. It's only been around since just around the Great Recession, right before 2008. What I did like is it has a little bit of non-U.S. stock in there. Not a lot, but a little bit. And they don't keep much cash on hand. I like these funds that don't really keep much cash on hand as well. And you can see very diverse overall, 185 holdings. Like I said, the one thing that I wish they would do on M1 Finance is let us go out like 50 years. If they could do like 1, 3, 5, 10, 20, 50, that'd be much appreciated. And I'm sure they will in the future. But as of now, that's something that I really wish they would change. So VIG, that's one that I really wanted to mention to you guys as well. And let's go with one more just for the hell of it. Let's see, we did VOO, we did VPU. We've talked about SPHD before. That's another monthly dividend paying one, FYI. You're not going to get a whole lot of return when it comes to the growth. It's it's a low volatility, high dividend paying ETF. I'm probably at the end of the year going to go ahead and lower this probably down to somewhere around 3%. It's not going to make a huge difference, but probably going to lower it down to like 2 or 3%, and then probably honestly put a little bit more into either the Spider Dow Jones or the dividend appreciation. We'll probably up that to about 9 to 10%. But anyways, we did VPU. Let's go with we'll go with the mid cap. Mid cap is one I'm kind of iffy on. When we go and I forget every time. So the mid cap is VOT. We'll go ahead and take a look at it. Got to go over to research. And like I said, on the app, when you go and click on it, it'll pull up everything right there. You don't have to hit research. It's just an extra step on this platform. So dividend yield's much lower. It's under 1%. That was one thing that made me, it didn't make me go the other way at the end of the day. Because at the end of the day, what I focus on the most is can you grow my money over the years? And as you can see, again, roughly 50% in 5 years with your dividend. You're talking pretty much dead on 10.5% a year. If I can make over 10% a year on my money, I will not complain. Double-digit percentages, averages, year after year. Obviously, you're going to have some down years, flat years, but overall, the average is what we care about. You break down 50% divided by 5 years, 10% a year, plus your dividends that you continue to reinvest. Just another one. And again, look at expense ratio, 0.07%. So that's a few funds for you guys to take a look at if you haven't already. And again, you can see I'm not starting with big money, anything like that in this account. We're just going to be investing $100 to $200 a month into it. Also have the 401k company match that we're putting into, but other than that, we're not doing a whole lot at the moment. I'm going to be starting my business here in the next few months, of course, if things go as planned. So, that's where a lot of money's going. But, the thing is, you got to pay yourself first. I cannot stress that enough. Pay yourself first. It doesn't matter if it's $100, $50, $200. Just try to pay yourself at least a minimum $100 a month, guys, because at the end of the day, $100 a month, was it $100 a month? We did this calculation once. $100 a month at 12% a year average. Again, you're not going to get every year, but average 12% a year over, I believe it's 40 years, will end up being somewhere around $1.2 million. So if you start in your 20s, retire in your 60s, you'd still retire a millionaire, which would make you roughly 40 to 50 grand a year of just passive income for retirement, not to mention everything else you could have if you invest just a little bit more along the way. So overall, I really like the M1 Finance deal. I'll definitely keep you guys posted whenever I do my updates, all that good stuff. This will be one of the accounts that I show you guys for sure. I'll let you guys know along the way any changes I make. Like I said, if you're not already in our Discord group chat, that's down in the description box. That's where I post most of the updates throughout the weeks. And then obviously we try to post a minimum of once to twice a week on this channel. Again, if you're new to the channel, definitely consider hitting the subscribe button below. We'd love to have you here. But on that note, hopefully you guys did enjoy the stream. Hopefully you enjoyed the video. If you did, definitely make sure to smash that like button. I greatly appreciate that, of course. And like I said, I didn't even know they had this new refer and earn thing. So if you're not already in M1 Finance, I'll link that up in the description below if you want to do that. I think you guys get $10 too. Invite your friends. I believe you'll get $10 too if you use that link. So like I said, I'll be sure to post that in the description box once this video uploads. But thank you guys so much for tuning in again. I know it's late. It's after 9 o'clock where I live, which means it's about time for me to go to bed. Hopefully you guys have had a good investing week so far. Hopefully you guys have stayed green. Let me know in the comments below once this video uploads if you like M1 Finance and if there's any other apps out there you want me to maybe check out in the finance community. I'll definitely be sure to do more of the review videos for you guys in the future. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And I will see you guys in the next video. Take it easy, guys.